to another lesson. This will start a three-part lesson on explaining how purchases of merchandise inventory are recorded in a perpetual inventory system. First, let's flash back to the merchandiser's operating cycle that we introduced in the previous lesson. In this three-part tutorial, we are only going to focus on step number 1, the purchase of inventory. Up to this point in time, Smart Touch Learning was a service business specializing in providing online courses. But let's now pretend that Smart Touch Learning has evolved, and now in this year, it becomes a merchandising business. Smart Touch Learning will now sell touchscreen tablets that are preloaded with its e-learning software programs. We'll continue with this example, Smart Touch Learning, as a merchandising business throughout the next couple lessons. When Smart Touch Learning purchases its tablets, it will do so from a vendor called Southwest Electronics. Southwest Electronics will send the tablets to Smart Touch Learning and will also send Smart Touch Learning an invoice. An invoice is a seller's request for payment from a purchaser, or more simply, just think of it as a bill that Smart Touch Learning needs to pay to Southwest Electronics. Here's what a typical invoice looks like, and let's look at several important components of this invoice. It will tell us who the seller is, which is Southwest Electronics Direct. It will also tell us who the items were shipped to Smart Touch Learning. The invoice will give us the invoice number, and all invoices should be pre-numbered, along with the date, June 1st. It'll tell us the credit terms. We will get more into detail about what credit terms are in just a moment, but right now, just to decipher this, it says that Smart Touch Learning needs to pay the entire amount of the invoice within 30 days. But if it pays within 15 days, it will receive a 3% discount. The invoice includes the total amount due, $35,000. Once the invoice is paid, we'll also mark on the invoice when it was paid. It looks like this invoice was paid on June 15th. When Smart Touch Learning paid this invoice, they didn't pay the entire $35,000. They paid only $33,950 because they made the payment within 15 days and received that 3% discount. Let's show you now how we record the purchase of merchandise inventory. Suppose Smart Touch Learning received the goods on June 3rd and made payment on that exact same day, so let's ignore the credit terms for now. Smart Touch Learning will pay the entire $35,000. When they do this on June 3rd, they would debit the merchandise inventory account for $35,000, and they will credit cash for $35,000 as well. Merchandise inventory is an asset account, therefore it increases on the debit side and has a normal debit balance. The merchandise inventory account is only used for goods intended to be sold to customers, so do not confuse merchandise inventory with office supplies or equipment. Office supplies are not intended to be sold to customers, nor is equipment. Therefore, these two accounts are separate accounts. Merchandise inventory is what we use to keep track of those goods specifically intended to be sold to those consumers. Let's see a slightly different example. Suppose Smart Touch Learning receives the goods on June 3rd and purchases the goods on account, which is much more common in business-to-business transactions. Still, not a very tricky journal entry. All we do here on June 3rd, again, we debit the asset account, merchandise inventory, for $35,000. Then we just credit accounts payable, our liability account, for the exact same amount. Now, purchase discounts are pretty common. Sellers might ask themselves, how can we encourage Smart Touch Learning to pay us sooner than 30 days? We'd like to get that cash sooner and not have to wait those 30 days to receive the cash from Smart Touch Learning. Therefore, Southwest Electronics and many other merchandisers offer purchase discounts. A purchase discount is a discount that businesses offer to purchasers as an incentive for early payment. So, when we look at the credit terms on this invoice, the payment terms of the purchase or sale is stated on the invoice. And you saw this a couple slides ago. The net 30 days just means the full amount is due within 30 days, and is often represented by N/30. But if you see something like this, 315 net 30, that means the purchaser, Smart Touch Learning in this example, can deduct 3% from the total bill if it pays Southwest Electronics within 15 days, 3/15. Otherwise, the full amount, the full $35,000, is due within 30 days, N/30. So this is a way that Southwest Electronics can encourage Smart Touch Learning to pay them sooner than 30 days. Now, let's assume Smart Touch Learning pays for the merchandise inventory on June 15th, which is within the 15-day discount period. Here is how they would record the payment. And notice, it is a compound journal entry with 3 different accounts being affected. Let's start with cash. We know that the entire amount that we owe Southwest Electronics is $35,000, but 3% of $35,000, $1,050, is an amount that we're not going to have to pay. We're going to subtract that 3% discount, and we will send a check to Southwest Electronics for $33,950. We are going to credit our asset account merchandise inventory for the discount amount because merchandise inventory now costs us $1,050 less because we're taking advantage of that discount. And we are going to debit accounts payable, our liability account, for the full amount. And that's a key point. When paying within the discount period, we will always debit accounts payable for the full amount because we are paying off that inventory in full, even though we're taking advantage of the discount and paying less than the invoice price. So when we update accounts payable in the ledger, accounts payable will be wiped out. It'll be down to a 0 balance because we've paid for the merchandise inventory in full. But merchandise inventory, when we post this $1,050, it'll be a decrease in the account because, again, the merchandise inventory costs less as we took advantage of that discount. So the cost of inventory when taking advantage of the discount is not $35,000, it is now $33,950. Now, if Smart Touch Learning does not pay within the discount period, rather they pay on June 24th after the discount period ends, then there's no discount and it's a very simple journal entry by decreasing accounts payable with a debit, $35,000, and decreasing cash with a credit, $35,000. This concludes part 1. Come on back for part 2 of this 3-part lesson, and we'll keep going with accounting for the purchase of merchandise inventory.